At our core and our core competencies, we're a critical minerals company. I've been in the lithium space since about 2011. Was a corporate advisor to Altura with James Brown, who's our chairman. James was the managing director of Elevra till about this time last year. He still sits on the board. He's fantastic to work with. But we're a $40 million company with 3 projects. All of them on a standalone basis could justify the market cap. We have a unique pathway, we think, in front of us where we're going to deliver on that value to shareholders. So, firstly, we have San Jorge, and the context for lithium, and I think probably 12 months behind it, graphite is improving. So, I spent a few weeks ago, I was in Las Vegas for the Fast Markets conference, and I went to the pre-conference stream. And in my investing career, I've always tried to find what I think are enduring dislocations between supply and demand. I worked as an equities analyst in the early 2000s, and iron ore, you could see the demand coming from China, and you could look at the infrastructure up in Karratha and Port Hedland, and I just understand they weren't going to be able to get enough tonnes out of either port. Price subsequently went to $240 a tonne. It stayed there for a very long time, and I've been a long-term believer that we have similar dislocations in lithium, and whilst I knew what was already a fragile supply-demand picture was about to be exacerbated by data infrastructure, I didn't understand the magnitude of that. So by 2030, data infrastructure in all its manifestations will consume as much lithium, if not more, than electric vehicles. So this time last year, you're looking at an industry that's leveraged to the growth of electric vehicles about 2 or 3% a year, not particularly exciting. Still challenged from a supply perspective, but reasonably predictable. What you have now is a total reorganising of the architecture of demand for lithium, which is going to affect our San Jorge project and affect it well. We're one of 4 companies that owns the salar in its entirety in the lithium triangle, and the relevance of that statement is if you think about the glass of water on your table, the fragmented nature of ownership of brines in the triangle is fragmented. You've generally got 5 or 6 straws in that glass of water. We've only got one because we've got all of it, and we have 36,000 hectares surrounding it. So we also have the table that the glass sits on, and in an improving lithium market, that's really important. We've made a pretty good start there. We've got 1 million tonnes from 6 holes. We drilled down to about 350 metres. We're stepping through a scoping study at the moment, and one of the really interesting takeaways from that scoping study was we've mapped the brine now down to 1,200 metres. So there's a linear relationship between depth and grade with lithium. There's less surface water, less dilution and less oxygen compromising your grade. So we think there is substantial scope that we add a lot of tonnes and we add a lot of grade. The other thing that we're doing there at the moment, which we've told the market, is we're running a process to get a strategic investor on board. At $40 million, it's a bit of a challenge to fund a full-blown drilling campaign and a pre-feasibility study. So what we're trying to do is to get an investor to come along and to help us along with that. We're a little bit further along, I think, than the market probably appreciates at present. We're looking forward to updating the market over the quarter as to how we've gone with that process. But it's a fantastic asset. We're very excited about it. The second project I'll talk about, it's unique. It's a legacy asset, but over the last few years we've done a lot of work on it, and I took over running the company on a full-time basis in May 2023, and we had this Q River project in Tasmania, and my first motivation was I want to get this asset to a point where it would survive a due diligence process. So how that has manifested is the first thing we had to do was bring it back well within environmental guidelines, which we've done. Literally the water in the settlement dam at Q River is cleaner than the Q River itself now. We updated the resource. We then isolated and worked out what the environmental liability was. So our decommissioning and rehabilitation plan is only $1.7 million. It's an open pit. We updated the resource. We've now done a scoping study. And out of all of that, we've now got a mining lease, and we're looking at processing the ore either next door at Helier or 20 kilometres up the road at Rosebery. And the scoping study delivers about $120 million free cash flow. All we're contemplating doing is moving the dirt, the processing, the tailings, and all those other long-term issues won't be ours. So we're excited about that. We're stepping through a feasibility study at the moment. We'll deliver that later in the year. And whilst we've been doing that in parallel, and more by luck, not by design, it's began to occur to me about 2 years ago that we actually had all the portents there to participate in this data infrastructure build-out. We have 240 million litres of water. there's a 63 megawatt substation, funnily enough, called the Q River substation. It has 43 megawatts of available hydro power. The site is cold, remote, it's secure. It's perfect for data infrastructure. So the important part that we did with the mining lease was we disclosed our intentions to the government. We met with the mining minister, met with the premier, we met with all departments, TAS Networks, MRT, the EPA, and we communicated to them what we wanted to do, and we got the mining lease on that basis. So we think at Q River there is a unique pathway, but a pathway there where we could potentially monetise that asset and make quite a lot of money. The third project we have is Graphmada. We built a graphite mine in Madagascar over 2016 to 2020. We operated it. We qualified the product into the EU, into the US. We sold there. We produced everything from super jumbo concentrates through to fine flake graphite. We had an unblemished sales record over that time. It's an existing mine. It sits under a mining lease. It's next to the National Highway in name only. It reminds me of the road out to Dubbo where I grew up in the 80s. It's not much, but it's 120 kilometres from the country's only deep water port. That project ultimately should support about 60,000 tonnes of production annually. We've taken the resource from 5 million tonnes to 62 over the last 5 years. So, I'll end how I began. I'll thank Jane and the team for having us here today. We are, I think, materially underpriced. We have a unique set of assets. We've got a well-articulated pathway for all three of them to deliver value. We've got a fantastic team from the chairman down. I put my name and number at the bottom of every ASX announcement, so shareholders' perspective or actual, please give me a call and I'll be happy to talk to you. Thanks for your time today.